My dear friends, welcome to Rajashekar classes. This is lecture number 125. In this lecture, I will continue my discussion on Wyckoff volume-based price action. You might have learned about several technical analysis tools used for trading in the stock market. However, the majority of these tools are price action based. The Wyckoff methodology, on the other hand, focuses on volume based price action, which offers far greater insights into the market behavior. Once you integrate Wyckoff method, otherwise I can say, once you integrate Wyckoff principles into your trading style, you will begin to truly appreciate the power and accuracy of Wyckoff method. Just try to recall, in our previous lecture, I asked one question. Suppose we have a big green candle. Just see here, we have one big green candle. If its volume is above the average, it is a genuine up move or fake one? Answering this question is not as simple as it seems. In today's session, we will try to find the perfect answer. Understanding price action basics. In price action analysis, we often talk about widespread and narrow spread candles. What is this widespread? You can see here, here widespread. Here this is narrow spread. A widespread candle means the rectangle body. This is the rectangle body. This is widespread, isn't it? A widespread candle means the rectangle body of the candle is large. It represents strong price movement. A narrow spread, this is narrow spread, isn't it? A narrow spread candle has smaller body. This one has got a smaller body, isn't it? A narrow spread candle has a smaller body, indicating limited price movement. According to basic price action, a widespread candle suggests trend continuation, isn't it? That's what we discussed. Just say a widespread candle means the rectangular body of the candle is large. It represents strong price action. What about narrow spread? That's what we were saying. What is the meaning of narrow spread? It means a candle has smaller body, indicating limited price movement. A widespread candle suggests trend continuation. This one, widespread. This is uptrend continuation, isn't it? A narrow spread candle indicates trend reversal. This is narrow spread candle. This is which indicates trend reversal. But remember, this only half knowledge, or rather less than half, I can say, isn't it? Rely solely on price action can lead to misleading conclusions. That's why we combine price action with volume analysis. In this price action, you should combine price action with volume analysis. That is important, isn't it? That's why we combine price action with volume analysis for accurate interpretation. Volume plus price action, that will give volume with price action, will give you complete picture. Let's take two red candles. Let me say this is first red candle. This is second red candle. Let's take two red candles as an example. When analyzing them, we must always check the volume. Here how the logic works. If a widespread candle appears with above average volume, this is widespread candle, this is average volume, it appears above average volume, it often indicates a genuine trend continuation. That's what we discussed, isn't it? It is a genuine trend continuation. However, if a narrow spread candle forms, just see, this is narrow spread candle. However, If a narrow spread candle forms with above average volume, this is average volume, this is above average volume, isn't it? A narrow spread candle forms with above average volume, it signals a fake move or trap. This is fake trend. This can be treated as fake. Why? Because this is narrow one but above average volume, isn't it? I can say, let me say, if a widespread candle forms, let me say this is widespread candle. If a widespread candle forms with below average volume, this is average volume, this is below average volume, it still represents a genuine but weak trend, isn't it? If a widespread candle forms with below average volume, it still represents genuine but it is a weak trend. And if a narrow spread candle, just see this one, this is narrow spread candle. If a narrow spread candle has below average volume, this is below average volume, it often implies trend continuation rather than reversal. In short, price action without volume confirmation is incomplete. That's important. I will repeat. In short, price action without volume confirmation is incomplete. Both must be analyzed together for accurate trading decisions. Let's take one simple example. This is TCS chart, TCS candlestick charts. In TCS chart, we see a green bullish widespread candle. Just see, this is bullish widespread candle accompanied by, this is, let me say, if it is average volume, this is above average volume. This one is accompanied by above average volume. Here both price and volume confirm each other, indicating genuine uptrend and trend continuation. Just see, this is trend continuation, uptrend, genuine uptrend and trend continuation, isn't it? Just see the same thing here, just widespread candle, white candle with this one high volume, trend is continuing, isn't it? For example, let me consider one more stock. This is, let me say, JSW Steel. Now consider JSW Steel. We observe narrow spread candle. Just see, this candle is narrow spread candle with very high volume. Just see, it has got above average volume, isn't it? Actually, price is increased here from this one, isn't it? We observe narrow spread candle with very high volume, a classic sign of fake move. This one is a classic sign of fake move. Such setups often create a bull trap. Actually, what we used to assume, as it is increased, we may think it is bull trap. It is a bull trap, isn't it? Such setup often created a bull trap where the price may soon reverse. In this case, the right action would be sell the stock. Just see, same thing here. This is doji candle, high volume. This is increased, but it is trap is created. Again, it will reverse, isn't it? This, what is this doji means? No narrow spread with high volume, isn't it? Same thing. It's a narrow spread with high volume, isn't it? Just see this one. Yes. Let me go back. Yes. This one. This is narrow spread with the high volumes, isn't it? Now, just see here also what's happening. Here also, this one is narrow spread. This is volume is increasing, but here trap is created. Again, stock prices is falling. What does it mean? What happens? What we were discussing here, just try to understand this one, what it says. So when you see widespread candle with above average volume, just see, this is widespread candle we are seeing with above average volume. Don't blindly assume it is genuine move or genuine up move. Don't blindly assume it is genuine up move. In fact, 70 to 80%. In fact, 70 to 80% of the time, such setups can be fake moves, especially when smart money is offloading positions into retail buying, isn't it? Well, just see here what's happening. Here you have green candle or white candle with high volume, but this one is created as volume is not supporting, this one is decreasing, isn't it? Same thing here also. Just see, this one is green candle or white candle with high volume, but what is happening? Volume is decreasing, doji candles formed, stock is reversed. What does it mean? As we are saying, are you ready to trade now? Wait. Till now what we learned in Wyckoff methodology, we learn only 5%. Still we have to learn 95%. For example, here just see what's happening. This day, on this particular day, you have got a big green candle with high volume, isn't it? Just see what's happening. Volume is decreased here. Even though volume is decreased, the next day stock is increased 18%, isn't it? 18% stock price is increased. Means that's what I'm saying. This one is true only in 70 to 80%. Remaining 10%, 20%, this rule that may be genuine, that may not be trap in 20% cases. We will try to understand all these things in detailed manner. Volume price action of, actually we have learned 5%. We will try to understand that remaining 95%. We will try to apply. How will we learn all those things? We will apply volume price action of multiple candlesticks. Till now which one we learned? We learned for single candlesticks. If you learn volume price action for single candlesticks, there may be possibility of fake signals or fake traps. That's what we were saying, 70 to 80%. There may be possibility of fake traps. There may be 20% of genuine things. That's we will analyze in my next lecture with the help of multiple candlesticks. Thank you very much.